following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Marty in Worcester, Mass. Hey, Marty, what's going on?
Hi, Mr. O'Brien. Got a quick little thing here.
Yeah?
It's called patience and perseverance.
Okay.
Patience. I heard a goddess yelling, the magic silent word, and methinks I must be smelling pokey money round the world. Perseverance. When markets roil like stormy seas, good traders seek safe port. In financial times like these, you need Tom O'Brien's gold report.
You are too much, Marty, man. That is so cool. Well, listen, man, I really appreciate that.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. It's the TGIF, folks. Let's make it a great one. This quote is by James Garner. Believe in yourself and in everything that you can be. Yesterday's gone. Tomorrow's not here. What are you doing right now? Market-wise, let's take a look at it out here. We have the Dow Industrials up 277. Nasdaq's up 54. S&Ps are up 26. Gold contract up $5.50, traded at $1,187 an ounce. Silver up 18 cents at $16.48 an ounce. Platinum up $10 at $1,141 an ounce. Copper flat at $2.92 a pound. Light sweet crude up 35 cents at $59.29 a barrel. Bonds, we have the 10-year up 16 ticks, 127.28. 30-year up 14 ticks, 156.13. King dollar up 111 ticks, trading out at 94.86. You got the euro down 58 at 112, and the yen is up 4 at 119.78. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. Let's take the SPY. We'll put the SPY up. We're at the highs out here. We spiked at the highs on the jobs number. Bottom line, what you have out here is this. You're doing 112 million shares. That's going against 160 million shares. You haven't reached the swing point yet. The swing point I was trying to test is the 212.02. We've hit 211.86, and what I expect you're going to see out here, 211.60. This will be 211.60. Okay, so this will be interesting watching this thing shake out. And what it would be is this. We've done, the market has just kind of stayed right where it's been. You had the first slight dip down, which is at 130. We had an additional, that little dip down had taken the SPY down to all of 211.30. What it gets intriguing here is that it's 211.46, which is the high that was generated in the fifth. Bottom line, what I expect you're going to see here, folks, you're at these highs. This thing doesn't want to break over these highs. This is a spike in a market that still wants to go south. Now, we'll see how we come into this close out here. If we go to the Dow Industrials, what's really intriguing here is this, and this is just how markets work. There's no two ways about that, is that the Dow Industrials had just started pulling back at about 130, and then Visa come out saying that they're going to buy Visa in Europe. And what did that do? That turned around and spiked Visa itself by 3 points. And inside the Dow Industrials, if you want to see how the strength goes, and this is just pretty wild. So there's not a Dow stock that is red. Visa, however, is the leader. That's up $3.12. You get Boeing up $4.29. We get DuPont up $1.95. DuPont's a dead cat bounce. Home Depot's up $2.50. The laggards, Coca-Cola is up 25 cents. Walmart's up 43. Verizon's up 35, and United Health is up 81. We go over and we take a look at the NDX 100, the QQQ. This is what we have inside the QQQ. We take a look at the daily first, and what you're going to see is that this is not only weak, but more than likely we have an ABC structure on the way down. So this is what you have. You have an 8-point out here at 111.16. That A was generated on the 27th of April. The B point is 106. we rammed down. We rammed down with some good juice, 42 million shares. The Qs are going to do about 25 million today, or 22 right now. That is a classic ABC structure on the way down. I just want to go back to the SPY again for a second, because I want to show you something on the SPY. On the SPY, what we're going to end up at the end of the day is a hanging man. Now, this is this is a trip in itself, because that's on the weekly basis too, not on the daily basis. The weekly basis, let me see. I believe that, yeah, we get a hanging man because we went down, we come back up. It's gonna close out at the highs of the session. Yeah, you get a beautiful hanging man. So what you have is that you have a hanging man going into a. Let me put this on the weekly. You have a hanging man going into a small doji. That last doji that we had up there was on the week of the 27th. Bottom line, we'll see where this shakes and bakes next week, but that is not a market, or that is not a signal, rather, that it wants to go higher. There's no doubt you get the bounce out here today. The bounce in the indices will be on light volume. Thus far, we've done 485 million on the NYSE. That is saying we'll come in about 650. If we take a look at the NASDAQ, where right now on the NASDAQ, we are pushing 1.5. So the NASDAQ will come in at about 1.8. Gold contract. What do we have with gold out here? Gold right now is trading at a price point of 1187. We have a Friday, of course. Bottom line is they didn't whack gold. We take a look at gold. They had every shot to whack it, too. There's no two ways about that. The gold right now had 132,000 contracts. We went up $5. I would have liked to see more price spread in gold today, because yesterday I really like what it did. Yesterday what it did is that, it got into a lower price, had light volume. The price that it was getting into was from the strength where it had 213,000 contracts. Today really is just a sideways move. That's how it's set up. If we look at the GLD, which trades at 10% of the price of gold, of course, what you have there, you get a sideways move. What the GLD is showing, and this is what's pretty cool, is that the GLD is showing an expansion in price as it got slightly higher. The GLD today, yesterday you backed down with 5.4 million shares. You're going higher today, and you get a big expansion, which is 8.1. So when you see something like that, that is building cause, folks. And, we'll see where this does shake out. But that is telling me that we're building cause not just to go up, but this is like a rocket ship, because when you start pushing swing points, which we've done in gold, and we've done this, by the way, coming right off the lows of March 18th, and we're almost into 2 months right now. Each and every time it starts pushing those highs, the volume expands. When you get into the lows, the volume is contracting. That is an indication that it wants to go higher. The way I can tell you what's very unusual. What is very unusual is the aspect that it hasn't broke higher yet with the amount of pushing that it's already done. Now, let's go over to the TLT. We take a look at the bond market. This bond market, folks, is absolutely screaming that the structure of the bond market has changed. And this is what it was. This is what it is. When we came off the lows yesterday, what we have is this. We have a high volume low, first off. The low in the TLT at 120.37 is a high volume low. This leg down took us from 131 down to 120. Today, what you're doing, you're going up on lighter volume. That whole dynamic has changed inside the bond market. It's going just the opposite of what it's done for years, meaning gone up in volume, pulled back with lighter volume. Now it's going down on volume, going back up on lighter volume. That is a dynamic change inside the marketplace. What we also have is this, is that we have, when the market goes up, bonds go up. When the market goes down, bond goes down. That dynamic change has already has taken place also. That's telling me that the next leg up in this bond market is a sell. King dollar. Let's go over to King dollar. We take a look at King dollar. What do we have with King dollar? King dollar right now also is bouncing on lighter volume. King dollar, actually anemic volume out here compared to how it's been trading. 56,000 contracts. That's what we're trading. We broke down on 77,000 contracts. It's going into 102,000 contracts. So when you go back and we take a look at the 30th of April, that's 102,000 contracts right there. That is building cause for lower price. And what we do know is that the market can't stand the weak dollar now. And all these different dynamics, are in place, and there's a lot of moving parts at the exact same time. So it's wild watching this whole thing shake out. Some of the high-volume stocks in this low-volume market, this is what we have. You have GE up 35 cents, Apple's up $2. NVIDIA is down to $1.64. Let me show you NVIDIA. NVDA, we do happen to be short this equity and Market Insights also, and I can show you why. You stay right there. We'll show you why we shorted it, number one, and we'll walk you through this trade. This is Tom O'Brien. This is TFNN. You stay right there, folks. We're coming right back. Dow Industrials are up 270. Nasdaq's up 56. S&Ps are up 26. We're going to be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, Nasdaq, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the markets, let's take a look at it. What do you have? We're up 265 in the Dow, 256 on the NASDAQ Composite, and 26 in the S&Ps. If we talk about NVIDIA, okay, so this kind of gets interesting. You know, and what, you know, it's interesting here out here today too, by the way, folks, okay? Right now, you have a market that's up 266 in the Dow. You get the S&Ps up 26. Depending on which side of the market you're on, I can tell you, I'm on the short side of the market. I have 5 short positions on, and they're all fine. So there's huge amount of underlying weakness inside the marketplace. That's the reality. So we'll see where this does move out next week. But that is a big indicator that underlying, you still have a market that's very weak. Let's go over and take a look at NVIDIA. This one of the positions was short. Now, this position has what? Well, we know what it's going to have. It's going to have a high volume low, because on counter trend bounce, I'm always looking for high volume lows. You're looking for counter trend bounces, the whole ball of wax. And this one's a classic, okay? So I made a high of 23 bucks. That was in March. It thunders all the way down, gets down to 20, comes down there with real juice, comes down with 13 million shares. And then what does it do? Does a whole counter trend bounce, goes from 20 bucks all the way back up to 23, 22.85 to be exact. Now it gets up to the 22.85 when it's trying to test that whole area, and it does it with 5.9 million shares versus 13.5. So that's one aspect of it. But I want to show you a separate aspect of it, because if you have the art of time in the trade, you know that when an ABC structure finishes, it does something other than an ABC structure. It normally goes the other way. So watch what happens in markets. In markets, folks, markets are going to go up till they get peaked out, down until they go through a trough and go back up, right? On a continual basis. When you have a number that finishes, your probability goes much higher that you're going to get a pullback if it was higher, and if it was lower, you're going to get a bounce. Okay, so watch what this did. I'm going to put this on a weekly for you so you can see, if you put a couple things together, that it's a lot easier bringing your probability higher that you're going to be correct in the assumption of what you're basically speculating on. So what NVIDIA had done is that when NVIDIA had broken out the week of February 13th, it was a nice breakout. It had volume, it had everything in it, okay? So your ABC structure that it did, you know, your A point on this is 1684. That A point was established the week of October 6th. Your B point was 2119. So you basically, you know, you had about 3.5 point ABC structure. Your C point out here was $19.17. Well, first off, what it did a full ABC structure on the way up. Okay, so it's like, okay, I like that. Did the whole thing. Now we didn't short it there. Then what it did, and this is when it's subtle, but it really isn't subtle. Then what it did, it came off that ABC with big volume on the way down. That was the heads up. Like, okay, man, now it came down with volume. So that got on the radar screen. Once it's on the radar screen, say, okay, now what are you going to do? You're going to wait for a counter trend bounce to get up to those levels again. Bottom line, took a couple weeks. What does it do? Gets up into that level. It comes into the level in a test on a weekly basis, 28 million versus 48 million. So we're 20 million shot, okay? Bottom line, that's where you pull the trigger. Why? Because you can put your stop right on the other side of the high, and what you're gunning for is this. Now, you always want a price point you're gunning for. Well, what you're gunning for, you know, you can go to the bottom of the consolidation, which is a decent trade. That's 2046. The larger issue, though, where this wants to go, which is sticking out like a sore thumb, is 1795, which was the high of the week of February 12th. Now, don't go short this thing now. But bottom line, that's the large position. So what ends up happening, they come out with their numbers last night, missed their numbers. Now what you have is that now you barrel into the swing point with monster volume. We're going to do 56 million shares out here going into the high volume, swing low of 48 million. So what I expect you're going to see, number one, is you're going to see a continuation of this next Monday and Tuesday. So when you're setting those trades up, you really want to wrap your head around, number one, what price projections have they already done? Number two, where's your money management going to come in place? And number three, what is your price projection? That's kind of how that shakes out. What I have found is this. It's really cool if your equities, your futures, your currencies, whatever, if they've just finished a full pattern. If they've finished one pattern and coming on to another, that probability is a lot higher. Because what you do have, like, there's no way that I knew that the volume was going to explode out of this on the way down. Most of the time, that doesn't happen. Most of the time, it's just going back to the high volume swing low. Some of them break, but most of them just go back to the high volume swing low and test it. And that's still good. Now, this is a bonus because why? Because volume's exploding out of it to the downward side. Intraday, there's a monster seller that's trying to get out of this thing in an extraordinary way. I mean, big time too. I'll pull this up on the other side so you can see this thing. Watch this. I have a little button that I can press that will give me the aspect of larger trades. What you're looking at right here is that you're looking at trades. This is really unusual, folks, okay? You're looking at trades of 27,000, 35,000, 40,000, 43,000, 78,000, 83,000. Those are one-time trades at a time. And unfortunately, someone's on the other side of those buying it, but that is one monster fund that is getting out of town as quick as they can get out of town. You don't have retail traders selling 40 and 80,000 shares at a time. The amazing part about it is that someone's actually taking it. Now, what I knew prior to this, and, depending on how long you've been listening, you know what ends up happening. Fidelity is the elephant in every room. Well, Fidelity had already started selling it in the last quarter of 2014. So that was a heads up in itself. I says, this is going to get really interesting. They're selling it. I suspect there's a lot more selling today. We'll see what they own at the next time that they have to turn around and basically come out and tell us what they're doing. But bottom line is that when you put something like that together, that's what you're looking for. Excuse me. Our phone number is 877-927-6648. Let's get over, and we're going to take a look at a couple of these gold stocks. We'll do the XAU first. XAU right now is trading at a price point of 72.18. What we've had with the XAU is this. XAU has been crawling up. It actually got over the downdraft of March, and it did it with volume, folks, okay? That was a big number. Anything over 71.55, which it's over, is a big number. That's saying it's going topside. This is Tom O'Brien. This is TFNN. You stay right there, folks. Come right back.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe Future Economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dow Industrials right now are up 269. You get the NASDAQ up 57. S&Ps are up 27. And don't forget, folks, all the programming at TFNN, get right on your cell phone, TFNN.mobi. That'll get you the full audio. You want to get Tiger TV, go to TFNN.com. Hit the little box on the right-hand side where it says mobile devices. You will get Tiger TV, which is the video and the audio. Now, if we go to the equities that are going up versus going down the most, okay, this is an absolute mind blower because of the fact that we're up 265, but guess what? You still have a differential, and the differential is pretty insane. So what do you have? You have Auto Canada, big number out here today. That's up $6. That's up 18%. CCL Industries is up $5, that's up 3.7%. Ritchie Brothers, big auction site, that's up $2, 6.8%. Charco, that's up $1.67 at 4.3. You get Yellow Pages, that's a decent one, that's up $1.63, that's up 10%. Now watch the other side. This is like crazy, folks, how this is working. Monster Beverage, that's down $14 or 10.7%. FLDM, I'm not even sure what this is. I have to pull that up. That's down $10 or 27%. Power Solutions is off $5.90 or 9%. Cormac Holdings is down $4.39 or 7%. Pro Holdings, oh my God, this is sick. Well, no, that's not that bad. Well, it's down $3.43. That's down 15%. Cerner Corporation's down $3.22 or 4.5%. Sprouts Farm is down $3.14 or 10%. Matrix is down 2.7 or 12%. You can get the gist of it. It's just amazing. And it's each and every day, folks, how this thing shakes out. Specifically, what I'm saying is that when these things get taken apart, they get taken apart in an incredible way. Let's go and we'll take a look at the oil market out here. So oil is trading out at $59.33. What oil has done, we're going to look at this on the daily and we're looking at it on a weekly. What we have on the daily is this. You have a higher price out here this week, hasn't been able to hold the price. You got up there nice. Today, let's see what we've done. We've done, going to be a toss-up here. Okay, so at the high, we've done 424,000 contracts. We back off that high with 437. Today, you're doing 380. So, you know, this is going to be, we're at 59.32. Okay. So what you have is this. Let me see the ABC structure first. Okay. This is going to be cool because this is a classic as to what is it doing first, and you're really looking for the price projection. So when I'm looking at this, this is a small ABC up. Your A point on this goes back to the April 1st time frame. And we have the A point is 48.79. Your B point comes up to the high, which is $10, which is 58. Your C is 55, and that set up a 65 oil. So that sounds like that's a lot. That would be saying that the oil went from 45 to 65, but that's how that baby set up. It had taken the B point out. It took it out with volume. You know, you back down somewhat here, but that's how that baby's set up. And so that's a 50% move on the oil market when you actually take the 45 from that low up to 65. Now, that being said, what you also have is this, is that because oil came down so dramatically, if we take a look at this oil contract and we just put it on, well, you want to see a disaster. This is probably pretty crazy. If we take a look at this, what you're going to see, a straight line move down, and what we're going to look for is to say, okay, give us a 0.382 just as a bounce. Oil went straight down, folks, from $107 down to 45. So a 0.382, which is a dead cat bounce in the marketplace, is $67.55. You want to wrap your head around that because it's so cool in the aspect that what you'd have at 65
for a jumbo preferred non-conforming loan anywhere
is that you'd have a oil price that is finishing an ABC structure on the way up. You have a 0.382 at 67.50. That's where you'd want to basically take a look at that position. Let's go to Brent in Martinez, California. Hey, Brent, what's going on?
Hey, Tom, how are you today?
It's going great, man. You having a good day?
I am, thank you. How about you?
That's a beautiful thing. Yes, I am.
Good. I was calling about natural gas today. It looks like a pretty strong day today. Just wanted your thoughts, please.
Let's take a look at it. Okay, so we have natural gas, and natural gas, come on, baby, get this contract. There she is. So the NGN5. Natural gas is trading $2.93. Look at that, and it didn't retrace. Interesting. Okay, so what you have is this. Oh, it's an ABC up. Look at that quick. Unbelievable. Yeah, it's an ABC up. Your 8-point on this is 254. Your B is 288. So we get 300 ticks, which is going to give you $3 and what is that? 360. Not 360. 3.060. So the 310 basically is going to be basically running for. Yeah, I mean, this took out a B point today with volume, and it wouldn't retrace. You know, our man, Mr. Dave, I'm sure he's sitting there right now even just listening because he was texting me yesterday. I brought that up on the show, actually. We were hoping that we would come back a little bit more into that 260 area. Yeah, you get action here. Are you in the UNG?
Yes, with
Nice.
some calls, yeah.
Yeah, with some calls, even better. So if we pull up the UNG, what you have is this. The UNG right now, folks, is trading at up 61 cents at $14.16, and you're taking out the B point there too. So your 8-point is 12.28. Your B is 13.95, 12.28. So that's $1.70. So that gives you $15, man. And look at that, it's hanging out there. So what you have hanging out there is the last swing point, folks. The low of the last swing point is 14.87. The high is 15.24. That's where that baby wants to go, man.
All right, thank you, Tom.
I think you're going to be taking your wife to the Four Seasons this weekend, I think.
Yeah, at the very least.
At the very least, I like that. That's right. Totally. That's a beautiful thing, man.
All right, take care, Tom. Have a great weekend.
Brad, have a great one, man. Have a safe one. That's a nice trade, man. And, you know, if you're trading those option markets, folks, okay, the spreads in the options, you know, are so tight. It's just amazing. And in particular, if you do trade the ABC structures, whether they're up or down, what normally happens in a structure like that. So picture, you have the A to B is going up. The B to C, because it's choppy and pulling back, most of the time on a B to C, your premium is going down because the market dulls out. And that's what's really cool about that structure, meaning it's a dull structure. The B to C is choppy structure. The velocity of the move is small in a B to C. So what tends to happen is that your premium inside the option market goes down, where, like this explosion today, top side, the premiums come right back into it. But if you're getting in those options when the premium is dead, that's a beautiful thing, because when it bounces, in this case, exactly where he wanted it to bounce, you take it out of B, you're taking it out with volume, you get two different deals. You're going to get the value of the move itself. In this case, it was 60 cents. Then you're going to get a built-in premium. No matter how small the premium is, it's going to be in there. Because why? Because option market makers, folks, have to protect themselves and the aspect of fast markets. That's how this whole thing shakes out. We're going to take a look at, okay, so we take a look at the oil. Now let's go over and take a look at the XLE. XLE right now is trading out at 81.78. The XLE, let's see. Okay, so it's going to be nice. So the XLE is bouncing on light volume. You know, we had gone down with the 17 million shares. You're going to go up with 12. This thing will go to the highs again. But you know, bottom line is that this is setting up for another sell, because the XLE, you talk about running into some heavy flack. The XLE itself is down off 101. You're at 81. You're running into, on a weekly basis, 270 million shares. And this week, we're going to do all of 76 million. So you can see that differential is about as heavy as you can get. That is a huge differential, and it's not the only one out there, because what you have, that was the first differential that's going out in October in the market. You had another one that came downtown in November, and bottom line, you're pushing into both of those, and you're pushing in with dramatically lighter volume. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow is up 268. NASDAQ is up 58. S&Ps are up 27. We're going to be right back.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make, and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. We have the Dow up 261, NASDAQ up 58, S&Ps are up 27. Let's go over to the IYR. I want to show you what all nice bounces are all about. Now, this sector is bouncing really nice out here today. This is the commercial real estate sector, okay? This sector in itself, okay, has a huge amount to do with the interest rate structure, specifically because inside the commercial real estate business, what ends up happening is that as they are selling deals, folks, they're really selling rates, okay? And as the market goes, you know, I don't expect the rates to go to the moon, but I do expect, you know, next year rates are going to be up. Right now, the 10 years at 2.1. It looks to me like that the bull market in bonds is over. So bottom line, we're going to come off zero. Now, when we take a look at it, what you're going to see, this is the IYR. Now, the IYR came down hard. We have come down from a price point. Well, first off, the IYR was on a tear on the way up. You know, we've come down off 83. You're bouncing today. You got as high as 77.21. We've done that on 10 million shares. Well, you're coming into 17 million shares, and you're coming into 20 million shares from the last swing low, which is 76.33. And you can see it can't even handle the 76.33. So what does this set up? Well, we put this on a weekly for a second, and what it looks to me is that you're going to be setting up probably another ABC structure on the way down. This is a classic ABC structure on the way down. We put this on a weekly. I expect to see this bounce a little bit more. But this is going to be a nice sector to trade off of the bond market because the dynamic has changed inside the bond market. And you can see some of these individual stocks are up dramatic. Well, they're up dramatic in the basis of the bounce, not of how they've come down. You got Simon's Group up 450. You get PSA up 470. You get VNO up 210. You know, nice bounces. So when you take a look at this thing, what I'd like to see is that we're at 76.44 right now. We'll see whether it can basically test that next week because the test today was on dramatically lighter volume. And depending on how we're out here on Sunday night, it's possible that that's a sell right there. It actually is. If I pull this back a little bit more, what you're going to see is this. This thing wants to basically run down into this on a weekly for a second. Yeah, this wants to run down to the next swing point. Your next swing point on this is down at the 70 to 68 area. So we'll see how that does shake out. But that is going to be a classic setup. And what you want to start getting used to, folks, is moving and watching the bonds in correlation to sectors. That's what you want to watch because what is happening here is that they're going step for step. Now, that'll change, but now this has just changed now, meaning this can go like this for 8 months, 9 months, a year, year and a half. So that change is important to understand because it gives you more than one vehicle to look at as you're moving in and out of sectors and or positions. Let's go over to the financial market, the XLF. We take a look at the XLF. What we have inside the XLF today is this. XLF is up 34 cents. You're 29 million shares traded, and that's still not enough because you're coming into this downdraft that was out there in January is dramatic. That was 41 million. That's on your daily basis. When you take a look at this and we put this on the weekly basis, what we have on the weekly is that we're pushing with 143 million into 177 million. So that one's not bad. That one's not bad. The thing that is going to hurt it on the weekly basis this week it doesn't look like it's going to be able to close over the 24.78. We're only 3 pennies away from it right now, but 24.78 would be the number that you get a close over it, then it would have a shot of testing the high. This has been consolidating out here since the week of February 13th. So that's a long consolidation in a sideways move. Big time, too. We'll just run through the TLT once again. The TLT out here, of course, which is the 20-year bond fund. We put that on a weekly basis, and what you're going to see is that is going to have a higher volume swing low. It cracked the last swing low. That was a high volume swing low. That was at 52 million shares. We've already done 58. The high volume swing low we're talking about, that was the March 2nd high volume swing low. That number was 122.97, and we got down to 120.37. And in fact, that's really interesting. So this one's really in trouble because it's not even going to close inside the higher range. I suspect you get some kind of bounce, but that is not even going to close inside the higher range. And what that sets up is that sets up the next leg on the way back down again. Will do what? It will at least test the low of this week, which is the 120.37. We'll see whether it can break it. I'll put this on a monthly. Okay, so on a monthly, this is a different ball game. Now, I say this is screaming that it's going down. So what you have in the monthly is this. The monthly, actually, folks, what happened is that we got back inside the lower range. On the monthly, this is saying, now this would be long-term, but this is saying we're going to go from 122 down to 104. So that is a big number. There's no two ways about that. Sunday night's going to be wild, folks, no doubt about it, because what we did have in Europe, well, actually, look at Asia first. Asia last night, you had the Shanghai was up 2.5%. Let me put the Shanghai up here first so you can see the correlation. The Shanghai, we had come off the highs. Yeah, this is good. Okay, it's good for a bear anyway. So the Shanghai had gone from 4,500 down to 4,100. Fast and furious. You bounced. This thing can bounce to like 42.82. So it can bounce another 80 points. You bounce on light of volume, that's going to be an ABC structure on the way down. If we take a look at the DAX in Germany, the DAX in Germany trades exactly like the NASDAQ. Not all the time, but likes to trade like it. Bottom line, DAX in Germany came off the highs and has a high volume low. The DAX came down straight from 12,388 to 11,167. The DAX in Germany, folks, wants to run to 10,700. I suspect what we got here, we're going to have a high volume, an ABC structure on the way down. That's what it looks like. Dow Industrials right now are up 269. You get the NASDAQ up 58. S&Ps are up 27. You stay right there, folks. I'm going to be coming right back.
The following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
Let's go to Nick in Tampa. Hey, Nick, what's going on?
Tom O'Brien, it is an absolute pleasure.
Thanks so much, man. We appreciate you calling.
No problem. Dude, I've been listening to your show for about 2 years now, and it has just been wonderful. I listen to you, Basil, Andy. You guys do an amazing job.
Well, thank you so much. We appreciate you growling and prowling out here with us.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. The TGIF, folks. Let's make it a great one. All things are possible to him who believes. It's a beautiful thing. Market-wise, let's take a look at it out here. We had the Dow Industrials up 267, NASDAQ up 58, S&P's up 25, gold contract up $5.20, traded at $1,187 an ounce. Silver up 17 cents at $16.47 an ounce. Platinum up 10 at $1,141 an ounce. Copper flat. We get the light sweet crude up 45 cents, trading at $59.39 a barrel. Bonds, the 10-year up 16 ticks, 127.29. 30-year up 11 ticks, trading out at 156.10. And King Dollar up 136 ticks at 94.88. The euro is down 61 at 112, and the yen is flat at 119.73. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world? In the world of the S&Ps, let's take a look at them. What do you have? You're at a high. Bottom line, you don't have the juice behind the move, but guess what? You're at that high. The volume wasn't that bad. We did 141 million versus 160. That's on your daily. On your weekly, what you have, folks, you get a nice little hanging man here. So what happens with a hanging man? You know, we'll see how this shakes out, but you have a hanging man that's going into, and this is a long one too. So the way that council charting or candlestick charting works, same word, is this. The longer that the actual signal is, the more powerful it is. So we'll see how this shakes out. This is a long one. It's 06 to 12. Totally. You heard that sigh. No doubt. Let's go into the NDX 100. We take a look at the NDX 100, the 3 Qs. Now, the 3 Qs only did 32 million. 32 million, you know, is going into 44. So the 3 Qs are much weaker than the S&P. We go into the small caps, and the small caps are what they absolutely took apart, and the small caps are weaker than the NDX 100. That looks like a monster ABC structure on the way down. You know, if we take a look at this, and what you will see is this. So the IWM went from 126 on the 27th of April, goes down to 120. You bounce today to 122.64. We did that with 24 million shares versus 74 million. And this is what's really wild, folks. It couldn't even get into the gap.
It was incredibly weak. And when you look at the intraday volume,
yeah,
you got into about 11:30. And the volume stopped till probably 2:30, 2:45. I mean, there was like, even the S&Ps, the volume crawled for maybe 2-3 hours.
No, there's no doubt. Well, and what you do have, folks, is this, is that the underlying market, you know, I'm not going to go over the ones that are up versus the ones that were down. I did that the past hour. But the bottom line is that I'll show them to you just quickly. Well, here, we can go over a few of them. But this has been happening every single day. The percentage moves are still on the way down in a credible way. You had Auto Canada that was up $6.99 or 20%, but you didn't, you know, the rest of them 2-3% on the way down, man. I mean, forget it. You're down 28%, you're down 10%, you're down 8%, you're down 7%, you're down 15%. I mean, they're taking these stocks apart.
If you want to pop one up real quick,
sure.
MELI.
Oh, is that the kitchen place?
No.
Oh. Oh yeah, no, that's right. This is the
Mercado Libre.
Yeah, this
has been. If you go back a little bit further.
Yeah, no, I'll put this on a daily. On a weekly? Let's see.
No, daily's fine, but just a little bit farther back, you'll see that it came back in. You had earnings. They break over the previous highs, and they come right back in. And so the ones that you were telling me that go up 6%,
right?
A lot more of these, because I'm going through these earnings every night at 4 o'clock.
Yes.
And you see this pattern, which is it breaks. A lot of times it has more volume, and they pop right back into the trading range, even though they do have those higher breakouts, maybe after earnings and everything else. So those 6% end up in a day or two. A lot of them are coming right back into the trading range once they're up.
Right.
Then you're telling me the other ones like Monster Energy, or the ones that I'm thinking of more likely, you talked about, but we'll talk about this as soon as you get done. On Monster, where you get this huge reversal back in there. But the one I'm looking at and see the pattern more is on WFM.
Oh.
Because
I had that one too.
Well,
not right here, but yeah.
Okay.
Yeah.
But the reason I say that is you have that huge sign of strength that goes back there in October.
Yeah.
Right, and you come off the bottom on it, but you basically blow through right back into it today with that kind of volume again. So it is one of those patterns that, you would say, I'm dying for this thing to get back to $42 on light volume so I can buy it.
Right.
And it doesn't. They're coming back and they're just smoking even the sign of strengths they had up. Not weak ones, but even strong ones. And so you need to be watching out for those particular stocks, because that one certainly looks like, 37, 38, back into that congestion zone.
This is a classic. So watch this, folks, okay? This is on a weekly. So this came off the high. The reason this got in my radar, came off the high with volume. So when they come off the high with volume, it's a big, you don't know how far they're going to correct, but they're pretty nasty. So this came down. On the weekly basis, we came down with 33 million shares, and then what does it do? Because up and test that with 12 million shares. It was like, you gotta be kidding me. And the setup was there, correct? Meaning the money management was there. But bottom line is that big action. So let's go take a look at gold. Let's go take a look at the gold market first. Next, rather, gold out here. What we have is that the contract itself didn't trade great out here today. I really liked what it did yesterday. Okay, it backed down, had lighter volume. Today we had a sideways move, 133,000 contracts, which is good. What I do like is that how the GLD traded today. The GLD, and this is where it gets subtle, folks. The GLD was pushing higher, and big volume came in. Okay, so we did 8.9 million yesterday. When you back down, we did 4.2, I think. 5.4. 5.4 was going into 9, and today you did 8, and it didn't have any movement. So what happens is this. So check this out, folks. This is really deviant. When you are pushing, and you're pushing higher or lower, this doesn't matter which way this goes, and you don't get the price spread, and you get the volume expansion in it, what I've found, that's the way that thing wants to go. And I remember, if I can go back 20 years ago, people think, well, that's distribution. That's not distribution, man. That is accumulation, and someone's accumulating, and you don't know whether they're trying to hold it down, accumulating it at the same time. And what you do there is that as you're buying it, you'll be selling it. For big funds, that's easy to do. And or just someone else wants to hold it down for a certain point to keep accumulating more. So we'll see where that shakes out. We go to the silver market. We take a look at silver. What we have with silver out here is this. Silver's trading out at $16.45. Bring this back to daily. There we go. Now, silver, and this is where silver's highly volatile in a huge way, not in a small way. But I like how silver is set up. What silver has done is that you get the expansion. It rejected a lower price once again, as did gold. But what you have with silver is that she's closer to the top of her first swing point, which is the $16.72.
So you're saying silver is stronger than gold?
Right now, yeah. It's not that it's stronger than, I'd say it's stronger than gold. And what happens with silver, though, is that it seems like silver can get stronger, and then gold's the one that moves, and then silver doesn't move. But silver gives you good clues as to what gold wants to do.
I always looked at silver could move quicker, faster, like a sprinter. But on longer moves, it was gold that always had the much bigger moves over the marathon, right?
That is the deal. Because if gold moves 2%, silver will move 4%. Right. If gold's down 2, silver will be down 4%.
But the first day you may have silver move 2.5 and gold 1.
Exactly.
And that goes for 3, 4, 5 days. But then you start seeing 2 on gold and 1 on silver.
Which is so cool. Which is absolutely so cool. That's right. Because as soon as it gets to a certain point, it backs down quite a bit.
Probably because it's more of a real commodity. And
because there's so much silver.
Money.
There's so much silver. What happens with silver, folks, is that silver is a byproduct of just about everything that's mined out there. Do you know what I mean? That's the reality. Dave White, Tom O'Brien, you stay right there, folks. We'll come right back. Dow finished up 267, NASDAQ up 58, S&Ps are up 24. We're going to be right back.
If you're like me, you see the world's emerging nations as a very real opportunity, as these countries and their economies are developing right before our eyes. And you can rest assured that Everbank has spotted this opportunity too. In fact, they just recently unveiled the new 5-year market-safe future economy CD. This is a CD that could really deliver, but you only have until May 7th to take advantage. Consider the facts. If the future economy's currencies beat the US dollar over the CD term, you'll get all the upside. And should they lose, no worries. There's zero downside risk here, as you still get back 100% of your deposited principal. Intrigued yet? The May 7th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is an equal housing lender and member FDIC.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us. And don't forget, folks, every trading day, Dave got a great show right here at TFNN, 2 to 3 Eastern Standard Time. He also has 2 great newsletters. You can test drive either one of them or both of them right now. Come over to our website at TFNN. You go to newsletters. First one, you go to trading newsletters. You'll see the path of least resistance. You can hit that one. You want to get the Tech Insider. That's the investment newsletter. Hit investment newsletters, the Tech Insider. You can test drive each one of them right here, right now. So
we were talking about during the break,
yes.
Bring it back up, that I was going through earnings and I saw GOLD, which is
right.
Rheingold, and I was asking you whether or not I thought it looked awful good, and you
Right.
say it's the best, but they show that they can get gold out of the ground for $708, but that's not the end of the story.
It isn't, and we happen to own Rheingold Resources, folks. Okay, and I've had the CEO on it for a few times. And it was cool when Dave brought it up because that number, and this is Rheingold Resources themselves. They were the first ones, and this is going all the way back to 2001. That every time when they do their numbers, right, they give the true cost of getting it out of the ground. Now, that true cost of getting it out of the ground, when you're reading the financials, has to do with not just the structure of getting the ore out of the ground, bringing it, getting it into the coin, into the bar, but then what it has to do with is putting enough money aside to fix the mine after the case. And that money is huge, folks. So that is a real number. Now, there's other companies that started doing that about a year and a half ago. Most of them still don't do it. So when you're reading those, what you want to read into is that, is there reserve there to basically put the mine back in, because most of these mines will last about 20 years.
If they've been doing it for a year,
right,
it's probably going to take them a pretty long time to get the reserve up to a level. How big are these people putting money away?
Well, what they're doing, that's a great question, okay? What they're doing what I meant by that is that hopefully that they've been putting money aside. I don't know if they have or not,
right.
Okay? But let's say it was Newmont. They turn around and say, okay, we're getting gold out of the ground at $800. Well, that's not gold out of the ground. That's not all in cost, because they weren't putting in what it would take to fix the mine after the fact.
Because when you dig it out, there's all kinds of things like lead and and chemicals you use to get it, and
That's
all that
right.
stuff. And all that stuff has to be taken care of,
It has
right?
to be taken care of, has to be put back. When they sign the contracts with the U.S. government or another government, or I think most of these our country, those contracts say that when they leave, they will put those mines back together. And you should Google a few of them, folks. I've Googled a few of them to see what they look like after the fact. And they look good.
Okay.
I mean, after the fact. You know what I mean? It looks like a big dump. I've seen a few dumps in the city. I mean, years ago, remember in the city of Boston, they were putting, there was a dump, like there's two dumps right in the middle of the city of Boston. Like, oh my God. And then they realized that, hey, we can't do that. And then they made them beautiful after that. And now they're great parks, okay? But that's important to understand. And, you know, Rheingold's a great example of that.
But 708 is one of the better.
That's cheap beyond belief. Okay, the least expensive gold. Now, this is not fixing the mine after it. Has to do, and it's one of them is it has to do with Red Lake. Okay, it'd be Gold Corp. And what happened with Gold Corp is this. This is when Rod McEwen had it. That Red Lake discovery was amazing, okay? So that's very cheap gold. Then what they did, and I'm glad they did it, because they bought GLG. What was it? We made a fortune on this. I should know what they bought.
Was it BGO?
No. They bought, no, that was a good one,
Yeah.
too. They bought, here, someone in the den probably had it, too. We had this, Glamis, thanks,
yeah.
man. We had it when they bought it. Now, they made a mistake buying Glamis, because Glamis was good, but Glamis was, their gold was way too expensive.
Yeah.
And I'm glad they did, because we owned it and, you know, it took us out. But what that did is that brought the gold cost up for them dramatically.
Yeah.
Dramatically. So let's go, you know, we were talking about NVIDIA, and this was pretty cool, folks, okay, because this is what Dave can do, particularly in the tech industry, okay? I was talking about we're short NVIDIA, and I was just shot on a technical basis, but now we're going to find out maybe
I want to say that I think it's a pretty good deal. Interesting that NVIDIA, of course, made chips mostly to go on video cards back in the last 10, 15 years.
Right.
Well, basically, you started seeing AMD buy one set of video card makers.
Yeah.
And then you thought you had Intel basically absorb the other stuff, and you had NVIDIA as the odd man out as a company that wasn't the processor manufacturer, right?
Okay,
So they're
yes.
standing out there in the field. So what do they decide to do? They can't get a suitor to buy them.
Right.
And it's very important. I'll skip that for just a second.
Okay.
But as they went to do that, they thought, what can we do? So they started thinking, well, we can make a graphics chip, and we'll make it to compete in these tablets, and we'll make it to compete in the smartphones.
Right.
And so now, really, they're up against a lot of big companies like Samsung. And they're up against Intel, who's increasingly getting...
That's sick.
Right. They're getting in. Now, at the same time, all the new chips from AMD and all the new chips from Intel have, of course, the graphics chips, not a real powerful one, but a decent one, built into every processor.
Right.
So
built into the processor.
Right. And that's been for the last year and a half or 2 years, right?
Right.
So their business and their price, since they came off, I think, about $13 a while back. And that was all on selling these Tegra chips that were processor chips. But the problem is, and we're going to get into it here in a minute, you got Samsung going to drop $18 billion for a new chip manufacturing plant.
Right.
You got Intel putting that kind of cash out every year. There's just no way that these guys are going to be competing anywhere close to these guys and at the scale these guys are operating at.
Yeah, and the difference, just so you understand, folks, I brought up the fundamentals on it. So NVIDIA takes in $4 billion a year, and Intel takes in $55 billion.
Right.
Yeah.
And
so it's 10%. Not even, it's 8% of the company.
Right. And that is the real problem. Is for scale, they can't do it. Two, Samsung is the biggest manufacturer. They basically can. I think they only buy 2 other chips for their new phone from anybody else. They make their own displays. They make their own chips. Intel's got its own thing, right? They've got basically 5 chips that they can build into one for a smartphone manufacturer and a tablet manufacturer. That business is going to get awful cutthroat. The margin's going to be it.
And then you're going to convince them to buy it, because I'm sure that they like to do everything themselves as a process, right? Why not?
Yeah.
Meaning Intel and Samsung.
Yeah, but they already have their own graphics technology themselves. That's what I'm saying.
Oh, man.
NVIDIA is standing out here in the cold hoping that someone would buy them.
Who do they sell to then?
They sell them straight to smartphone manufacturers. But that business is slowly starting to wane out.
Right.
As you said, they've already missed their earnings, right?
Right.
Okay. One, because Apple's making its own processor, Samsung's making its own processor. That's the bulk of the business. The only thing they have to go after is the low-end part of the business, which is the lowest margins. Right? It's AMD. There's a reason AMD's $2 against Intel. They just now, on a level of scale, can't invest enough money to keep up with Intel.
No, you can see that.
NVIDIA, the same thing. Now, they still make big margins on high-dollar video cards.
Okay.
But that's always a smalling and shrinking business, as most of these people like Intel are building their own chips, so they don't
you know, it's wild. I know you're a gamer, and I just got a new laptop. Man, those gaming laptops are expensive.
Yeah, they are.
They're double the price, man. Unreal. You stay right there, folks. Dave and I are coming right back. Dow finished up 267.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. sequence. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Do you know the 7 most critical factors that influence every decision you make and how not knowing these will jeopardize the health, the wealth, and the relationships you deserve? I'm Steve Rhodes, morning host at TFNN.com, and for the last quarter of a century, I've studied and used the secrets of human growth, the same formulas used by leaders of nations, billionaires and millionaires, and the most successful athletes on the planet. Would you like to break through any obstacle that gets in between you and the success you deserve? Would you like to turn fear into strength? If you could find a way to achieve, be fulfilled, and live a life of meaning, wouldn't you want to know the answer? I'll teach you the factors that control your state of mind and the drivers that impact every thought, emotion, behavior, and action we take in my new webinar, The Psychology of Trading. Join me for this 2-part online event where I'll unveil the secrets to human pattern recognition, because they're not what you think. And soon, you'll have the health, the wealth, and the relationships you deserve. Just go to the homepage of TFNN.com and click on The Psychology of Trading to begin your journey now.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage, or call our office directly at 877-518-9190. There's a limited supply, so act now.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. Dave has a slide up. It says, Apple streaming. Apple wants to kill Spotify free music streaming service.
That's right. What they are doing is going to the people they signed contracts with.
I thought Apple was a nice company.
Well, they basically like playing hardball. They already have been fined almost $500 million for when
they put the squeeze on publishers, right?
Right, on book publishers along with Amazon.
Right.
So these guys are willing to play hardball. The thing that gets me is they already have the Department of Justice, a guy sitting in an office at their headquarters now watching over what they do.
Okay.
And this is so patently illegal that it's kind of tough to find out, but it's already leaked that they're going around to all these folks that they've already signed deals with and saying, cut them off. Come up with something.
Cut Spotify off, right?
And we'll give you whatever they were getting already.
Yeah.
So that we can set up our pay music streaming service, and you pay as you go. And it's all great if you're probably the top 50 acts.
Yeah.
The problem is that if you're not part of the top 50 acts,
You get nothing.
You're going to get nothing because no one's going to pay to hear your music stream, right?
Right.
So there's a handful of artists that look like they're going to come on with this deal, and the first one's that little skinny girl. I forget her name. She's everywhere, though.
Okay.
You know which one I'm talking about? The little blonde girl?
Oh, that's the Taylor Swift.
Yeah.
She's huge. Yeah.
Yeah, it looks like they're going to drag her on because she'll be able to get a lot of money.
So Apple has the Apple Store. They've sold. I mean, they got this down pat, selling the music. But now they're going to do streams, right?
They want to do an Apple Radio. Is what they want to call it, and it's part of the Beats music system that they paid $3 billion for Beats. Well, the problem is everybody in the music industry is basically broke because of Apple and their whole thing before. So everybody in the industry hates them. They've got people running ads against them in Billboard magazine every week saying how horrible Apple is and how they've destroyed the business. So they weren't really open with a lot of easy doors. So they bought Beats because Beats had already signed a lot of agreements with these guys. So they were able to buy Beats, get the deals,
get the contracts
without having to go through and have these people that hate them, say no, right? Because no one wanted anything to do with Apple. So now the problem is in the last probably month, they've been trying to get the last few deals they really need to roll out Beats
with big people,
and no one will sign with them. So
it's going to be what Apple's almost sounded like an investment bank. They doing business, and specifically what I mean, folks, okay, is that is illegal. What we're talking about, meaning the aspect they got caught at, and it's probably just part of doing business again.
Well, we talked about it.
Meaning the fine that they're going to end up getting.
They paid $3 billion for Beats. Is it worth it now to pay another $500 million fine if they get their hand caught in the cookie jar, right?
It probably is because if they got it going, then all of a sudden that's it. It's
the question is whether if they get it going, they can keep it going after that happens.
Right.
Which is tough.
Yelp
and the identity problem.
Oh, didn't you hear Kramer? The Yelp's a buy.
I heard.
Talk to me.
Okay, this is a bigger thing than just Yelp.
Yeah.
But it's called. It's basically coming down to what in the industry is called the identity problem.
Okay.
With Yelp, it was all the competitors of a restaurant or a.
That's right. Bad reviews,
but they were from your competition.
Right.
And these people put in phony names and they did a lot of other stuff. Well, this has become and snowballed, and it's been a problem, but now it's really like an onion. The more you peel it, the more you see what's underneath it.
Right.
It's not only a problem for Yelp. It's a problem for Twitter, where you have all these phony people coming in on Twitter and twitting things. And a lot of people say, well, I've got 100,000 followers, right? And they really have 50,000 or 20,000, right? So you really don't know how powerful someone is. We now know politically, and I think this is an issue that we'll get into with the UK election.
Okay.
Because everybody was so far off on what they thought.
The gamblers weren't, though,
The gamblers hit it right on the nose.
Check this out, folks.
The wisdom of crowds.
Masses. Yeah,
the
right.
wisdom of crowds.
What happened, folks, is that the what do you call them? The analyst, the poll takers. The poll takers were totally way off. But guess what? In the UK, gambling's legal, and the gamblers weren't. The gamblers won.
They were on the money.
Yeah.
Now here is the issue, and we can take it back even a month. I brought it up on my radio show. There's a national radio show, and they had a bunch of people, like hundreds of thousands of people, calling their advertisers saying, "Quit advertising to these guys." And they're going, well, these are all from different email addresses. And they're all over the country and everything else. And the people that run the network go, where'd this come from out of the blue? We just don't see this. So they hire some people and they track it back.
Yeah.
Well, they find out that 85% of all these emails came from 10 people. I mean, hundreds and hundreds of thousands of emails. Right. And one guy was worth 30% of those emails. Is a college professor in Ohio.
Really?
Right. And he's paid by other people in politics, basically, to do this stuff.
Right.
And the technical term is called astroturfing.
Astroturfing.
Right. It's fake grass. Right. It's not real. It's not. Everybody says it's grassroots. Right.
Okay.
It's not. It's astroturf. It's fake grass.
Wow.
In the political version. Well. So these guys went back and said, okay, here's our proof. you just ignore all these folks, and your business is good, isn't it? Yeah. People are listening to our show. Yeah.
Right.
Okay. And here's the 10 people that you just need to ignore. They've got a lot of scripts. They found and used the technology to come up with ways of inventing phony email addresses and everything else. But the whole idea goes back to, are the people on the end, is this phony outrage phony? Is it real? Can you pay any attention to a bunch of people on Twitter because there's a bunch of phony accounts on that? In fact, there was like some deal that happened a month ago, and within 10 minutes there was like 50,000 Twitter things, right?
Well,
and they were all fake because they were from this college guy in Ohio. It had nothing to do, but it looks like there's a bunch of people there, and it's just a mirage.
Okay, so check this out, because, folks, this is really cool in the aspect of what we're talking about. And this goes back, depending on how long you've been in the marketplace, this probably, if we were in the marketplace in the 20s and the 30s, we'd probably have stories about it then. We weren't, but we're in the marketplace in the 80s, okay? And I suspect that you really know about this because you were a software writer at that point. What was happening at the beginning of the 90s, that's when the
click fraud,
right? And what was happening is that big companies, huge companies were buying clicks off each other. Okay? No, this ain't a click fraud. What I'm talking about specifically is that they were doing, do you remember, okay, started in 93, 94, 95. They would sign contract. I would sign a contract with you, right? Let's say 300,000. You'd sign one with me, 300,000. So what was happening is that when the internet was just starting, on both of our books, your gross income was going up because what was happening is that the market was paying for revenue, not for earnings, okay?
Right.
So that was a big scam. Now, I'm going to fast forward to right now and what Dave's talking about with the Yelp problem. Advertising. The biggest fraud out here, and it's a continual fraud. Okay? Goes like this. Now, check this out. This is intense because I have to deal with this all the time when I'm presenting something to an advertiser. This will blow your mind, folks. And I'm talking about GM. They're not the frauds, okay? It's the advertising, watch this, they'll pull me, No. So what? No, this is in advertising agencies and everything. But when you see the definition of it, you won't believe it. The GMs of the world, the Procter & Gamble's of the world, they're trying to figure out, okay, how do we basically get our money out of advertising, okay? So what they've done for years, and it's always been happening, okay, when you're on TV, they're paying these astronomical rates and they don't even know who is listening. And it's an arbitron. So arbitron is arbitrary. It's always been arbitrary, but because it's such a bureaucracy, everyone believed in it. Okay, so they do it. Well, what has happened is this, is that when it went from arbitron, and they're still around, okay, from TV to digital, what happens in the digital, you can follow it a lot more. So now, you can picture it. You're a large advertising agency. In fact, the largest advertising agency in the world, and in the UK, he gets paid the most money in the UK, and it's Sir Martin Sorrell, okay? And they go crazy over there because he gets paid so much money. But watch what happens. The definition, when you're pulling up a web page, right? The definition that a Procter & Gamble, a General Motors, or anyone is paying for that ad, right, is that it only has to show for 3 seconds. 3 seconds. And they're paying a fortune for it, right? So picture, I'm going to come in and say, okay, I lay out my proposal, here's my proposal. Now, we don't do it. What ends up happening is that, when you pull up TFNN, you're going to see that we don't have enough advertisers. That's the bottom line, because I'm not out there selling all the time. If I was, we'd have more. But bottom line is that when you pull it up, whoever is out there paying for it, they getting it, okay? There's a huge difference, but the amount that they've owned up to, the Advertising Council has owned up to, is over 40%. So 40 cents of every dollar. And you're talking about billions and billions of dollars, right? Never get seen. Okay. Isn't that crazy?
It's nuts.
It's unbelievable. And now that will change in the future. But right now, it's not changing. Dave White, Tom O'Brien, you stay right there, folks. We'll come right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Tom O'Brien.
Welcome back, folks. Dave White, Tom O'Brien. Appreciate you growling and prowling with us out here. What you're looking at, if you happen to be watching Tiger TV, folks, you're looking at a chart of Green Mountain Keurig. Keurig Green Mountain, rather. And it's a monster ABC down. You get a price point of 90. Came down this week, exploded to the downside. This stock had closed at 107 on the 6th of May, and it opens up at 95 the following day. Huge volume. So you get a price point of $90 now.
And Coke bought all theirs at 87. So I'm watching what happens.
Wow.
Remember that when it took off?
Okay.
Coca-Cola bought in. So I'm wondering what happens at 87. But that's part of it. That's just part of it.
So now watch this. This is pretty cool, folks, because Dave had this slide. So talk to me about the slide.
They have, if anybody's had one of their devices.
I have one.
Right.
We have one.
It has little things that look like coffee creamers.
That's right.
Right, and the coffee's in them, and
yes,
they're different sizes.
That's right.
2 cups, 4 cups, right?
Yeah.
Put them in, hit the button, and make the coffee.
Right.
Well, Green Mountain didn't like the fact that other companies were making coffee that they could put in their own device.
Because they make so much money in the Green Mountain coffee, folks, right?
Correct. Now, this is a theme I'm going to get into during the discussion. But another company figured out a way around it.
Yes.
Right? And it's become a huge problem because the more that Green Mountain tries to make sure they have what are called digital rights managements, right?
Yes.
That only their device will work in this.
Okay.
Someone figured a way around it.
Well, you know what's so wild about that, okay, is that, when Green Mountain first started this, folks, I had the CEO on. They made Vermont company. We were giving away these Keurigs. We had like about 25 of them in here. So what happened, which I thought was really unusual too, is that I hadn't used one in years, and then we started using it about 6 weeks ago.
Yeah.
And I have Starbucks in it. I said to myself, oh man, this is pretty cool.
Yeah.
You can put Starbucks in it.
Right.
And then Bridget was telling me that it's not only just that. If we want to take, there's another little container that we have put in it. We can put regular coffee in whatever we want.
Right.
Okay. So that is what they don't want that to happen. So the new machines don't have that. Is that what happened?
Well, as soon as they made it so no one else could use it, someone figured a way around it.
Oh, interesting.
Okay. And now that's really hit them again because the people were ticked off that they were forced into it. Now they're doubly doggone not going to do it, right?
Right.
And that's what happened. And the
Green
CEO,
Mountain's not going to do it?
No, the customers are not going to do it. They found a way around it, and they said, now we're not even going to buy any of yours, right?
Right.
Because we're really ticked off.
Right.
We found a way around it. It's much cheaper. I can buy Starbucks, put it in for half the price.
Right.
I'm not going to use yours at all.
So
now.
this comes right back to really just like Gillette sells the razor, and then the razor blades only fit Gillette, right? And that's what they're trying to do. That's what they want to do.
That's what they want to do. They want to be like HP, who was the king of being able to make sure that whatever you had did not work if it came from someone else.
Sure.
Now, they had some lawsuits too, but it's a lot easier in HP. So let's take a look at both the 3D.
And what HP does too, this is funny because I just bought another HP computer, and when Mike was opening up, getting it all going, he says, "Look at and we got folks. We get computers around here all the time, right? Because we're a tech company. So what ends up happening is that he says, look, they changed it again. They keep changing the power, the structure of the cords like every 6 to 7 months, so you can't use another one just as a backup.
Yeah, it's insidious.
Yeah.
But the point is that 3D Systems was $97, and it's down to $22. SYSS was $130 and printing off in the mid-30s now.
Okay.
Both of those were 3D companies, 3D printer companies, and what they couldn't do is keep people buying their plastic filament for their 3D printers. Other people started making stuff that would work for it, and the whole idea that you can be HP seems to be problematic for a lot of these companies, whether it's a 3D printer company or a coffee company, forcing people in the printer company, like you said, they change things enough.
Yeah.
People don't want to be buying a new coffee maker every 3 months.
No.
Right?
No.
And it's a lot tougher for them to get around that. And people have done it in 3D company, and the CEO said, quite honestly, we were wrong. We underestimated the passion consumers had for using other coffee, right?
Wow.
So now they got all these people ticked off, and they're actively going out there.
And I get it. So that's why the sales went down. That's why the ABC structure is on the way down.
Some of the people that were doing this are now buying the replacement ones and giving them to their friends. So, up yours.
Well, you know
current,
what?
right?
It seems to me that, the older machines are worth more now.
Yeah, it could be.
Right? Because you can put anything in them. That's all I'm just saying.
It
no
could
big
be.
deal. Samsung. Here's a big one, folks.
We were talking about NVIDIA and the size of scale. I wanted to get back to this. Samsung basically announced yesterday that they're going to build a factory. $18 billion. Now, where everybody's
With a
buying... With a B. Everybody else is buying their shares back.
Right.
They're buying massively huge factories out here. And my guess is that...
For future growth.
For future growth.
Yeah.
We are not over here in the United States doing anything for future growth for the most part, right?
Right.
There are some car size, but it is the size of 400 soccer fields.
Oh, my
The
God.
complex, which is almost as big as the company's two largest factories
That's amazing.
already combined. So now we talked a little bit about what's happening in the marketplace. Samsung buys 2 chips from another companies to make a S6, their new Galaxy phone.
Okay.
2 chips is it.
You know what
when this factory's done, they'll buy no chips from anybody else. They'll be able to make every single chip that goes in a smartphone and not have to deal with any other companies, which is something Apple would like to do, but there's no way that they're going to be able to do it.
You know what I would love to see? In Korea, folks, okay, I haven't been there in a long time, but these large companies, the companies in general, they also are into working out.
Yeah.
And what they do, I forget what company I've seen. I don't know if it's Samsung or not, but I've seen a lot of large companies. And in the morning, at the breaks,
calisthenics and all.
Everyone comes outside and everyone's working out. It's so wild watching it. It's like, oh my God, you can't believe there's that many people doing it at the same time. Tesla.
I wanted to get to this because there's been a lot of brouhaha about it.
Yeah.
But basically,
selling the battery packs.
They're selling the battery packs. To me, it made
They're not going to have them for a year and a half, but they're selling them now.
Yeah. To me, it made no economic sense whatsoever, and I said so on my radio show. The next day, Bloomberg came out with this piece, but it's very enlightening. 16 kilowatts of power, of continuous power, is about $3,700 from a generator from Home Depot.
Okay.
Okay. That would compare, or you need to do the same thing, $45,000 worth of Tesla batteries.
Because you need 8 stacked Tesla batteries.
Right. Now,
$45,000 or $3,700.
Their $3,500 is basically the installer price. It's not what you pay.
Okay.
It also, like I said, $3,500 just isn't that much. Now, the Generac power supply, or the generator, runs on gas or propane. But it'll last 20, 30 years, right? So
wow.
Not 5 years or whatever, right?
Amazing.
Okay.
Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, fly with it. Thanks for being here, folks. Have a great weekend, safe weekend. Dave and I, rest of TFNN, look forward to speaking right back here next week. Great show. Bam! Go get him, Dave.